Hi traders and welcome to the Technical Analysis Market Watch on Friday the 2nd of February. So I've seen an action-packed week with really big earnings coming out of the US and big news, and that roller coaster isn't over yet with non-farm payrolls on tonight. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so I'll start out here with the Aussie USD, and you can see we've had a really big move over the last couple of days. Actually, we've seen two big candles. One hit the 20 and the 50 moving average and then came straight back down to our support. So this little zone that we've been talking about over the last few, well, probably 3 weeks nearly, has been really good in terms of providing the resistance and support that we need to actually get half decent trades on a scalping in between that 65.50 and that 66.10 to 20. Not a big range, a fairly tight range actually for the Aussie for general trading, but it has been pretty good on the smaller time frames to actually get in and out. But we can see it had a really big attempt to push down to the 65 cent mark today, which is a crucial zone for it. It did touch that crucial zone, but a big rebound up. So we've got a big hammer candle basically bouncing off very heavy resistance. You can see the resistance right through this level here. All of these spikes right through that there, and then it came down, basically touched it, and then kicked straight off it. So it's a very interesting close for the Aussie, back into that trading zone until we actually get a close below that 65 cent mark or above those moving averages now at 66.20. You still want to be playing inside that mini zone where you can scalp inside it and basically take your profits at the resistance and effectively, or the support if you're going short. It's what I would be doing until we actually get a clear breakout, because in reality, it hasn't really done anything to give us any indication that it's going to. It attempted to actually get there, but that was only getting there. And we know that's actually very strong support there. The fact that it's rebounded so quickly, I know that's based on a lot of news from other indices as well. So look, we'll jump straight into the other ones and we'll see what how they're playing the game as well. But really for now, we would still be sticking inside. We've got heavy resistance above with both moving averages, as we know. We can see right through there. And the support is very strong down here as well, given that the roll reversal zone from that previous resistance will keep it in check, I would imagine. So keep inside this zone for scalping. Up and down is fine, but just be really wary of those key levels when it does get close to them. All right, move over to the US dollar CAD. And yeah, look, this has been an interesting one as well. We had a bit of a sell-off earlier in the week. You can see that it came down off those highs from last week and effectively came back down to that sort of 33.80, which isn't, no real surprise there. It had a push up, but again, today's trading has really knocked it around a little bit. We've seen a bit of a drop in oil too, a big 2% drop in oil, which is a big change actually, given its circumstances, and that does affect the US dollar CAD a little bit. So no real surprise to see the weakness here. I'm still not really sure which direction we're going in here, because it could do either, and we would be very comfortable with both. If it makes a series of lower highs and lower lows in a smaller time frame and breaks past that 133.80 area, especially on a daily, I would be fairly comfortable to short it. But indeed, if it does long from this point onwards and gets above these peaks here, that's a very comfortable long as well, up to 36. It's not always that way. Like sometimes if it does move in a particular direction that doesn't really play sync with what the technicals are setting up with, you don't really feel comfortable in that particular direction. You only want to do one thing to be comfortable. I'm very comfortable with both here because it's finding itself in a place where you can make a very solid case for both moves. So realistically, I would wait for the momentum shift to either start tracking up on the smaller time frame. If it does, you can take some short-term profits at these previous highs. I wouldn't be trading past those until it actually breaks them. That wouldn't be a bad long. But if it does break and close below that 133.80 on a daily candle, I'd be looking for shorting opportunities down to about that 132.50 area, which is a little bit higher than here, and not bad trading on the CAD. But just be mindful though, it can do either very easily, and both of them would make a lot of sense from a technical standpoint. So we're very welcome to any move on the CAD, as long as it starts to trend on the smaller time frames in a synced manner, being higher high and higher lows, or lower high and lower lows on an hour or something like that. That'll give you some pretty good targets to go for. Again, just scalping until we get a clear direction. All right, we'll move over to the US dollar yen. Similar in the sense that, look, we saw a pretty reasonable sell-off from that level at 148.50. No real surprise there. We know that's very strong resistance. Yeah, for those of you who have been watching these videos for a while, you know, we talk about these levels all the time and they do play the game for us. It came down, hit the 20 and the 50 moving average. We know that's important. Obviously, we've got another roll reversal here. It's trading just below it at the moment, but there is a lot. It's a zone, really. It's more than a level. It's really a zone. So what we want to be seeing is a rebound from here if there's going to be any strength left. You can see that's probably about 38 pullback on a fib if you do look at that big overall move. So if it does turn around from here and starts to trend up, on a smaller time frame, we know we've got a very easy and logical target at 148.50. That would be my preferred trade. I don't really want it to go much lower from here. This is opposite to the CAD. I'd much prefer this one actually go long. But if it does go short and it breaks through all this noise, there is a fair bit of noise underneath it, I would wait for a retest back up to that 146.50 level before we actually short it. So let it break down, then come back and retest it, then look for a shorting opportunity from there. Then it makes a bit more sense. For me, I would prefer that it actually turned around from here, started to print a series of higher highs and higher lows on a smaller time frame, and then we look towards a move up to the 148.50. That's definitely the preferred move. But if it does break through and come back and retest a 146.50 from below, then we can start looking at shorting opportunities back down to that 144.50. So good trading on the yen. It's been pretty good if you've been shorting it. And yeah, that was obviously a very clear short zone. So hopefully you're able to get hold of that. But yeah, the take profit is where we are at right now. And hopefully you're able to get hold of that trade. Okay, dollar index. Look, similar to the Aussie, how it was actually trading in a very, very tight zone with a lot of wick action, but we saw some weakness. There's no question about that. A lot of this is related to the news, of course. Like we've got a very, very heavy week of news. All the big US stocks that were reporting this week, the Magnificent Seven, a lot of them have disappointed so far, but there are three big ones that we're waiting for after market. The market hasn't closed yet. So, yeah, really, the ones that have reported so far have been disappointing at best for the markets. So it'll be very interesting to see how the three big ones report today. I think we've got Apple and Amazon after the bell. We'll keep an eye on those, and really that's going to affect probably the NAS more than anything else, but that has been actually affecting the dollar strength as well. So if they report really ordinary and the indices start to drop off, you can be bottom dollar. This is probably going to pick up from here and start looking at highs again around this area here. But I would look for support at this level. It's going to be very, very news dependent. So I can't stress enough actually how important it is to keep your trades in check over the next couple of days up until Monday till we get all the news out of the way. It is non-farm payroll tonight. So we've got to be very mindful. There's still a lot to come out this week in news. It's been a very, very big news week, and that's going to affect the dollar strength. But look, this is obviously very heavy resistance at 103.50 to 104. It is at a support zone now where it would need to hold at this level here. But the real strong support is actually 102.60, which is not very far away. So keep an eye on that as a secondary support if the 20 moving average doesn't hold it. Over to the euro, and look, yeah, obviously just the opposite of the dollar index at the moment. It's been selling off. We've been seeing lower highs and lower lows. It's basically found itself up to the 20-50 moving average. More on the daily, that is. More than likely, that's going to provide a fairly heavy resistance for it. It's got very heavy resistance here at 108.80. It has been for a very long time. So look for a reversal at this point here. If we start to see a series of lower highs and lower lows, we aim for the 108, pretty straightforward. If we continue up and we get a break above the 20 and 50 moving average, the next target is around that 109.50. So pretty good trading on the euro, but it's got a break. I would trade inside these two zones. I'd scalp inside these two zones for the next 48 hours or so. If that's your way of trading, I wouldn't be looking for longer term moves yet until early next week when we start to get a little bit of clarity as to where these markets want to start moving when the news is all out of the way. But a close above the 109 or a close above or below the 108 on a daily would be a significant turning point, and we'd see that trend continue in either direction. So good trading on the euro, but you've really got to watch for that key break. And over to the S&P, look, no real surprises here. Obviously a big day today, around a 1% move up. So what we've got to look out for here is, really wait for the news to come out, wait for non-farm payroll, wait for the earnings, even though they're not, totally dependent on the Magnificent Seven's earnings. The NAS still has an effect on the S&P 500, of course. So we'll see what they give us, and we'll see most importantly, what non-farm payrolls gives us tonight. If you're looking at long opportunities before non-farm payroll, I'd only go to the previous highs. That's the easiest way to trade that one. I wouldn't be looking past that until we actually break through. let someone else do that for us, and then we'll take the trades after that. But if it starts to look short again and we start to see a series of lower highs and lower lows, especially after non-farm payroll, the 20 moving average will be the logical target. But the secondary support zone here is at around that 4,800. You can see here very heavy resistance at that point there. So 4,800 will prove to be a real barrier for this to continue down. So we'll pop a line there and I'll give it a line. That is the area there that we're looking for to find support. So if we start to see a series of lower highs and lower lows and you want to scalp it, look for taking profit around that level there, and then we'll look for a rounding bottom next week. But of course, if the news is good and it breaks to a new high, then we're looking at it from a totally different lens next week. But just be very, very careful this week because obviously we've got a lot more news coming up. So I hope everyone's had a great week's trading. We've had some really, really good moves, and our levels have played the game for us. So hopefully you're able to take advantage of those. Have a great weekend, and I look forward to seeing you all next week.